A sell-off overnight in US equities keeps stocks in check, with mid-caps feeling the heat. Metals and utilities take a beating, but IT and financial heavyweights restore the balance.
Competition Commissioner of India's nod for a merger of Reliance-controlled Viacom with Disney's Star India portfolio paves way for creation of a world-class leader in sports and entertainment. Stocks of both TV18 and Network 18 are higher in trade.
Indigo airline owner Interglobe Aviation sees a big block trade of 5.8% of its equity as co-founder Rakesh Gangwal offloads another slice of his stake to rake in over 10,000 crores. His tally from such sales now totals nearly 27,000 crores, and he still holds over 13% in the airline.
SEBI warns investors to be careful when investing in SME stocks. It points to malpractices by promoters in several such companies that are aimed at defrauding unsuspecting investors.
Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Nigel D'Souza. Well, it's turning out to be a session where we are just about consolidating for the frontline indices, but the pressure seems to be in the broader markets at this point in time. So we have the mid-cap index, which is clearly in the red, so down around 0.8%, as you can see on the top of your screen. We have an advanced decline ratio, which is favoring the declines today, so around 1,300 stocks plus, which are advancing, to around 2,600 stocks which are declining. So as you can see, the gap is quite wide. Hi, Nigel.
Well, Ekta, one of the reasons is that at the end of September, there is this F&O margin cushion that a lot of investors and traders have. Now, that is going to be removed. So some of the brokers, I understand, they're already adjusting to that. This curtailment starts at the end of September, but some brokers, well, they're asking various investors, traders to square off positions from now on itself. So that's the reason, that's one of the technical reasons why you're seeing the mid and the small caps are under pressure. I think the total number is more than 1,000 stocks that will stop enjoying the benefit of this margin, F&O margin that they get right now. So that could be one of the reasons why we're seeing a shift to the larger cap names, while in fact, the small cap and the mid caps are under some pressure. But let's move on. On the sidelines of the ongoing Global FinTech Fest, our colleague Ritu Singh exclusively caught up with Mr. Prashant Kumar, the CEO of Yes Bank, and spoke to him about deposit growth for the bank and the sector, the stake sale buzz, and also the job cuts. Let's hear out what he had to say.
This is definitely one thing which is a systemic issue, okay? Because either we take a call that loan growth has to be lower than the deposit growth. It means banks would not be prepared to support the kind of growth which country is aspiring for, okay? And so whether it has to be supported only by the bank or it can also be supported by the market instruments. But fundamentally, yes, if I think this kind of economic growth has to be supported by the bank, then the deposit growth has to be higher than the loan growth. And which is, in the current times, I would be saying, has been a struggle for the banks.
I wonder if you'd like to clarify, there have been some reports about going back to the cost question and the question of profitability, the bank looking at restructuring of some jobs that may be affected. If you'd like to address, there were reports suggesting as many as 500 people were let go of. If that exercise is completed, or will there be more numbers?
No, I think it came in the newspaper. But if you see our investor presentation for Q1, actually we have added 500 people. So March 2024, it was 28,000. June 30th, it is 28,500. So it is not like people are going out. We are adding more and more people. But I think issue has to be seen more in terms of right kind of people for the right job. So if you are focusing on a particular business, you need to add people for that business. Okay? Similarly, whether you need to add people more on the sales side instead on the leadership. So I think the all institution would like to take a call where you have people more on the sales side. So if you are 20% plus deposit growth, you need to add on the sales side. So actually we are adding employees.
Yeah. And you're talking about 22% kind of deposit growth outlook for the year. Is that the number you maintain?
Yes, 22%, and the CASA growth is 23%.
Yeah. Well, the other topic again, since we're talking about what's in the newspapers these days, is Yes Bank looking to give an exit, or rather, some of your largest investors, the banks that supported you, through the reconstruction, now looking at an exit. Has the bank engaged in any bilateral conversations with any potential suitors? And, what sort of management changes in the offing? Are you looking at a 26% kind of a stake? Are you looking at a 51% kind of a sale? What should we expect?
No, I think I'm not the right person to answer, because ultimately this is the stake of the different banks. Okay? And I think that those banks would be in a better position to answer what they are going to do with that stake.
Sure.
As a bank, we can't decide. We can't take any call. So I think the banks who have invested in us, you can ask that question from them.
But, as the bank, as the CEO of the bank, have you held any discussions with any potential suitors? Because when you're talking about a change in management itself.
I think as a bank, I can't engage with any suitor. No? It's a stakeholder who has to engage with someone.
Because there have been reports suggesting whether it is Sumitomo Mitsui, whether it's MUFG, Emirates, NDB, lots of names,
It's very difficult to comment on all the newspaper reports. But fundamentally, it's the person who has that stake has to take all the calls.
Yeah. So you're not aware of any, decision to that extent, of course, because that impacts you. So
whenever we would be aware, I think we would disclose that appropriately.
If a foreign, owner was to come in, what sort of regulatory changes would that require? On one hand, there are the FDI regulations. While there's a 74% cap, individual foreign banks may not be able to hold more than 15%. RBI rules say the promoter entity will not have more than 26%. Individuals, again, have to go to RBI for approval. So, what sort of regulatory policy changes would this require for you to have that change in ownership?
No, I'm not aware. I'm not aware.
Well, let's then switch to the other acquisition that you have spoken about in the microfinance business, that you've been scouting for a while. How soon before we hear that?
No, I think this is what we were exploring. We have done last year also. But last year, the microfinance institution, they were in a very good shape. Yeah. And the price expectation, valuation expectation was altogether different. We were not having that capacity to do that. But I think that is something which we continue to explore.
Have talks been held with Spandana Spurti?
No, I'm not taking any name. But like wherever it is possible, we would try to explore.
But how soon before we hear something from you on this front? Because, it's been ongoing for a couple of years.
Very difficult. If it is possible, I will like to do it as of yesterday.
Yeah.
Okay. But I think all these things take their own time, and you need to take a call in terms of valuation, your own capabilities. But this is important for us.
Okay, so that is the management of Yes Bank in a candid chat. Well, we need to take a short break, but up next we'll be talking to Ashi Anand, who's the CEO and founder of IME Capital, to discuss key things to watch ahead of the RIL 47th AGM. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, let's discuss the big event for today. Reliance Industries will be holding its 47th annual general meeting 2 p.m. onwards this afternoon. Investors await concrete plans for the Jio and retail IPOs. Updates on the new energy projects and Jio's 5G monetization will be keenly watched out for. To discuss this and the state of the markets as well, we have Ashi Anand, CEO and founder at IME Capital, who's joining in now. Ashi, hi, welcome to the show. Well, if you could just start by giving us a sense in terms of what your key expectation is from the Reliance AGM and what would probably be the most market or stock moving according to you.
Sure, perfect. First of all, thank you. Thanks for having me on this show. So I think in terms of market expectations around the Reliance AGM, and the Reliance AGM is probably one of the most watched AGMs in the Indian corporate landscape, given the kind of tendency for certain big bang announcements. So if we're really looking at this year's AGM, I think what we're really focusing on is there have been certain important announcements made in previous AGMs. So in 2019, for example, they spoke about potential listing, both of Jio and the retail business over a 5-year period. So you're kind of coming towards the end of that. You have seen certain progress or certain indicators of possibly getting prepared for listing. So if you're looking at the retail business you have seen accelerated payback of loans, you have seen ESOPs for senior employees. So I think a very, very important and possibly the biggest market moving element here is going to be any kind of update about potential listing of both the retail and the geo business. Now, apart from this very important corporate event, I think markets are also going to be focused on what's happening on the new energy business. It's something which could potentially add a lot of value, but is obviously in very nascent stages. 2011 is when they really announced this, and they had spoken about a $10 billion investment over 3 years with longer term plans of setting up 100 gigawatts across fuel cells, hydrogen, battery, and other renewable segments. Now, any progress in terms of what is happening around these new energy initiatives, because that really helps in terms of the longer term transition away from the petrochem business towards newer energy. So this is again something which is going to be closely watched for, just in terms of updates on plans, but probably corporate actions around the listing is something which is probably the focus of the market. I think apart from these two key elements, you're also going to be looking at any indications of a possible merger of Disney into Reliance's media business, as well as other updates that may happen on geo financials.
All right, hi Ashi. Good day and good to see you, Win. So we have got that in terms of expectations. Have neatly summed that up. So that's about Reliance, and in the next 2 hours we'll know, from the management itself. Let's focus on market then. How are you feeling right now? The way we have rallied, the feeling particularly about the broader markets is a little bit uncomfortable. The select stocks have moved up. How do you view this? If you're allocating fresh money right now, how much of it would be to the large cap space as well as the mid cap space? Because you got instances from the SME market, select F&O stocks, which are not very comfortable.
So actually, we are fairly comfortable, right? And I think a lot of that is based on where we are positioned in terms of our portfolios. So if you're looking at the broader market construct, I think we are very, very positive for growth over the coming decade. India is really just shining from an overall global perspective. Our economy's growth potential over the coming decade is just heads and shoulders over everyone else. Now, if you're looking at the whole, and this is something which leads us to be very positive from longer term growth perspective, you are going into next month likely to see a start of an interest rate reduction cycle, especially in terms of the US Fed. So this is actually an important kind of a tailwind for the market that we do see actually emerging. I think when you're looking at valuations, you have to look at it in the context of the underlying growth story and the underlying quality. And both of that for India has really improved substantially over the last 3 or 4 years, with multiple new drivers of growth coming in. Now, when I said we are fairly comfortable in terms of our positioning and we're very comfortable from an overall market perspective, is because our portfolios are a lot more tilted towards large and mid caps. There are certain pockets of the market, this would namely be small caps, possibly for specific sectors. And I think the MSME exchange for sure. There are pockets where there is clear irrational exuberance, there are clear excesses. But the moment you get out of those segments, right, and you look at the broader markets, look at certain large caps, there are still, even at current levels, enough areas where we are seeing value with growth and kind of overall quality. So I think we are fairly comfortably poised.
Okay. Just wanted to come back to the RIL EGM and just had a question with regards to the IPOs. What, according to you, is the timeline when it comes to the Geo as well as the retail IPO? And what would you like to hear in that context? Would it just be a timeline? Are you expecting to probably have a decisive kind of date?
So we'll know the answer, right, in a couple of hours. I think even if you get some sense of an update in a timeline, right, because this is something which clearly people have been expecting, we are very close to the kind of timelines given a few years back. Even if they do give some kind of an indication around, is it happening this year or the next year, right? That itself will be something I think which will give markets a reasonable amount of clarity. I'm fairly sure they won't come out with a specific date. In our assessment, it seems like Reliance Retail is a little more further along the road just based on certain kind of actions taken at the company level that seem to be in preparation for an IPO. So even if you just get broad indications that Reliance Retail will happen this year, Jio will happen either this year or next year, it will be something to give markets clear visibility in terms of what's happening. Specific dates, I would doubt would be announced.
Okay, all right. So let's talk about then themes that you like. I think your position more towards defensives, I believe. Could you tell us what all is on your radar and what do you like at current reckoning?
No, so not really. I think we are quite balanced. So if you go back about 4 or 5 months back, we were quite heavily tilted towards cross capital formation. So various parts of the market that were doing reasonably well. So we had large exposures in real estate, in capital goods, and that part, right, and including defense. And those exposures really helped us last year in terms of outperforming overall markets on a large and mid cap strategy. What we have done going into the current year is a lot of the weightages that we had in some of these segments had actually moved up quite substantially. So we have trimmed we've basically done partial profit booking, got down these exposures to what they were at the start when we may have initiated positions. And some of this has kind of gotten reallocated towards consumption, a certain amount of banking, etc. So I think we are quite well balanced from a portfolio perspective in terms of segments where there is momentum. So this would be a real estate, capital goods, capital marketplace, etc., as well as kind of segments which haven't really performed and where we are seeing some kind of revival. So consumption is something where we've increased weights recently. BFSI, especially banking, is a space where I think the combination of growth, quality, and value is really quite comfortable. So I don't think we've gone defensive per se. It's just kind of, I think we're well balanced in terms of both of these segments of the market. But it is very clearly positioned towards large and mid caps. We are staying away from heavy small cap exposures.
Okay, all right. Just staying away from small cap exposures. But Ashi, IT seems to have come back. There's a lot of optimism now that the Fed could be on a rate cutting cycle. So how would you approach IT from these current levels, and how much does it probably comprise of in terms of your portfolio right now?
So IT, we are still underweight, but we are marginally kind of underweight. I think what you are seeing in IT is that for a couple of years, this has clearly not moved, right? And there is clear potential for a catch-up rally. There is a certain amount of excitement happening around the fact that once the US Fed starts reducing rates, that could signal an improvement in economic outlook and therefore increased IT spends. At least as of right now, these are kind of expectations. There isn't enough on the ground visibility of this happening. So we've just kind of gone past the recent results season. And if you saw the recent results, while there has been an improvement in the BFSI outlook, overall kind of guidances in terms of organic growth are still in the kind of low single digits. Now, that is something which, according to us, is enough for some kind of a smaller trading pop. But in order for IT to have a more sustained run, you need this kind of combination of reduced interest rates and an improvement in economic outlook, leading to organic growth outlooks moving a little higher. You need at least a 3-4% delta happening there. And I think until that happens, we'd probably be neutral to slightly underweight in IT and not have a very large position. That said, I think it has underperformed for quite a long time. Various parts of the market, as in you are in this kind of phase where you are seeing some rebalancing of the overall market momentum towards segments which haven't performed, and IT could actually clearly do well there.
Okay, all right, Ashi, it's been a pleasure speaking with you. Thanks very much for joining in and talking to us and giving us your perspective. So that's the word coming in with regards to the markets. As of now, the mid-cap index has recovered a tad bit from the day's low, but still under pressure, so down around 0.7% as we speak. We'll take a short break, but up next, full tilt on the markets. Apurva Seth, head research at Samco Securities, will join in with some trading calls.
Welcome back. Well, since we have, expiry that will play out later today, so we should be keeping an eye on the options data. Before we do that, just keep an eye out on NBCC. The stock had a big run yesterday. Now the news that's flashing for you on the screen is that they've sold New Delhi commercial space with sales value of around 1,221 odds. We'll try to get the management, try to get a comment with regard to this. But otherwise, the stock was buzzing because of that bonus issue. So that's why we did see a bit of a spike on that front. But let's focus on the option space, as I told you earlier. 25,000 put, that's seeing a fair bit of addition. The way traders are positioned today, they don't expect, the 24,950 mark to get breached on the downside. The premium earlier today was around 35 rupees. So that's why we're getting that reference point of around 24,960 odd. On the upside, though, you're seeing the 25,150 call. Markets are up close to 80 points, 30 points actually as of now. But there is writing at that level, and that's why you're seeing that the premium has come down. So the premium earlier today was around 25 rupees. That's come down to around 13 rupees. So on the upside, the positioning is such that we don't get past 25,150. Let's get in Apurva Seth, head research at Samco Securities, who joins us. Hi, Apurva. I wanted your view first on what's happening with regard to the broader markets. You understand that there's select stocks that otherwise you could give them as margin for F&O trading. And now that they won't be eligible from the end of September. But the buzz is that certain brokers are saying you better, start aligning yourself from the end of August itself. Could that be one of the reasons why we are seeing selling pressure in the broader markets?
So that can definitely be one of the reasons behind the sell-off in the broader markets. Also, other than that, a lot of stocks have run up a lot, and there seems to be some sort of profit booking coming in. So, and if you look at the global markets as well, so we have seen a sharp pullback rally in S&P 500 after the yen carry trade thing, which happened last few weeks ago. So, considering all these things, we feel that there's a profit booking which is mainly happening at current levels. We have seen good run up, and the next trigger, which is probably the US Fed meet, which is going to happen on 18th of September, is still 3 weeks away. So markets are tending to take some profits and waiting on the sidelines. So that's the view that we are having on the markets right now.
Okay, all right. That's the view that you have in the markets and specific stocks, Apurva?
So on stock specific front, we like Lupin, which has been trading in a rising channel for quite some time. It has delivered strong set of numbers with good operating profit margins of more than 22% for the first time since 2016. So the PAT and sales have also crossed its quarterly PAT and sales have crossed its lifetime high. So we would like to take a trading view on this with a stop loss of 2,100 and a target of 2,400 in the short to medium term. Next would be GSPL. It has been, it would be a buy on dips to 400 levels. It is breaking out of the cup and handle formation. It owns about 54% in Gujarat Gas, which is valued at around 40,000 crores. And it recently we have seen that a lot of these holding companies are buzzing. And in October, there is likely to be a special session where all these holding companies might be trading, and we might see a fair bit of catch up happening. So GSPL is a buy with a stop loss of 380 and a target of 460.
Okay, all right, Apurva, we're going to leave it on that note. Thanks very much for joining in and giving us all of your calls. Just watch out for the Bajaj Finance twins. Bajaj Finserv is up around 2.5% Bajaj Finance is the top gainer at this point, up around 3% for that particular stock. Not done much this year for both of these counters. Let's see if there's any kind of catch-up which takes place. We'll take a short break, but up next, we will get you a conversation with Ravi Shankar Singh of Colliers India to discuss their house price tracker report. Stay tuned. Welcome back. Well, let's put the spotlight on the housing sector now. A report by Credai, Colliers and Liases Forest says that the average housing prices have increased by 12% annually across 8 major cities, with Delhi NCR witnessing the highest price rise of 30%. To discuss this, we have Ravi Shankar Singh joining in from Colliers. on this report. Ravi, hi. Thank you very much for taking the time out. Well, there's a 12% rise that we've seen in terms of prices. Can you tell us, Delhi has led from the front, but what are the trends this year? Are you expecting this double-digit rise to continue? And if so, is Delhi again leading, or which are the cities that you are seeing most traction in?
Good afternoon. Thanks for having me. Yes, on an average across the 8 cities, we have seen a 12% rise, and obviously Delhi contributing to the maximum. What gives me a lot of confidence is markets like Bangalore and Pune, where we see a lot of end-use demand coming in and people actually buying properties to live in. Delhi, there were a lot of fence sitters during the COVID time, who have come to the forefront and bought properties between 23 and 24. But there is a big investor base also, which has hit the market, which has seen the surge in the pricing. Okay, so markets like Pune and Bangalore, Hyderabad, gives me more confidence because it's end-use driven.
Okay. All right. Hi, Mr. Singh. Good day and good to see you in. This is Nigel on this side. What's catching everyone's imagination is the NCR market. And that's normally the one that goes up the fastest. But when things get shaky, then it gets into a bit of a tizzy. How are you reading the trends out there? Most friends and family, they say you put your money in that market, you'll make X, return, which makes you a little bit worried. How are you seeing the trends out there, and how far is it away from that bubble territory, so to call it?
Nigel, spot on. This has historically been the case with the NCR market. And what I would, urge people to do is don't treat real estate, at least housing, as an investment product. It's a physiological need. And the need has to be driven from end use, not like a financial product. So yes, the investors flock the market when they see the opportunity in this region. But, for sustainable growth, we need to see more end users coming to the forefront.
Okay. All right. But, just on that point where you mentioned that the end user market is what you're probably most bullish on, which includes Bangalore and Pune. Bangalore has risen around 28%. So it's just about followed the Delhi NCR region. It's probably one of the better markets this time. How much was Pune? And are you expecting this kind of increase in pricing to continue for a market such as Bangalore?
If you evaluate both these markets, the ticket size is still pretty affordable. We are talking about between a 75 lakh to 1.5 crore ticket size, which is trading the maximum in these two markets. And, this is driven by the large IT demand in both these cities. So, yes, and even if you evaluate the inventory overhang, it's the lowest in these two cities. So yes, I see a very strong demand going forward in Pune and Bangalore. And the new segment, the ultra luxury segment, that is a different, it's growing at a different trajectory. In both these markets, there is an audience which is aspiring for these super premium products. So that's why we see those 15,000, 16,000 square feet pricing existing. But yeah, bulk of the demand is still around the 75 to 1.5 crore price range. And that is going to drive the market going forward.
Tell us about the trends in the unsold inventory. Where is inventory building up? There are select markets, where you're seeing so much of demand that inventory is getting dried up, which is a good sign for pricing, good sign going ahead. But there'll be a couple of markets where unsold inventory is still building up. So give us your observations on that front.
Delhi has had very few launches this year, but the festive season coming, we see developers launching many more products in this region. Bangalore and Pune, everything is getting absorbed in the price category that I have mentioned. So yes, there is a lot planned for the second half of the year. And, we are expecting this sales momentum to only go up. It is not going to come down in the mid segment.
Okay. All right. We're going to leave it on that note. Thanks very much, Mr. Singh, for joining in and speaking with us. Well, that's the update coming in on the real estate market. That is one space which is definitely bullish, and it's probably being fed into in terms of the equity gains that we're seeing. So no problems coming in fact, for the markets, which has picked up pace. So we have the Nifty, which is up around 0.5%. We have the mid-cap index, which is still underperforming. But nonetheless, there is some amount of a pickup from the lower levels, which has taken place for the markets. We'll take a short break, but up next, we'll get you a lot more on specific stocks as well as the overall market. Stay tuned.
Welcome back. Well, a few stocks have taken off, which explains why the Nifty has moved to the high point of the day. Adani Ports, big spike is what we're seeing on that stock. At the start of the show, the stock was in the red. Now it's moved into the green. So Adani Ports comes up for you. Britannia as well is building on to those gains. A good up move is what we're seeing out there. And the FMCG index has moved up. That's because a couple of these names. Britannia, yes, but that's a lighter weight on the FMCG index. You have HUL and ITC, which are the big boys in there. Both of them have spiked up. And that's the reason why we're getting support on the Nifty itself. But the Nifty bank needs to cross this 51,400 mark. That's the resistance level. That's where the 50 DMA comes in as well. So the 51,400 on the Nifty bank is the most crucial trigger from here on. For the time being though, the way the markets have moved up, if we can sustain at these levels, we're going to have a very, very exciting finish and the bulls will feel that they are in control. Well, let's move on then. Samir Modi says that he is willing to consider all options, including selling the business to end the Godfrey Phillips family dispute. In an interview with CNBC-TV18 days ahead of the company AGM, Samir sided with his brother Lalit and calls on shareholders to out their mother, Beena, from the company's board. At least 3 proxy advisory firms have issued recommendations to shareholders to vote against the reappointment of Beena Modi as the managing director of the company. Let's listen in to what he had to say.
You said you agree with your brother Lalit Modi. One of the proposals that he had put forth as a result of the arbitration in Singapore, one of the issues that he had raised as a way of settling this inheritance dispute is to sell off the entire business altogether and then use the sale proceeds to distribute them among the family members. Are you in agreement with Lalit Modi on that issue as well?
I'm in agreement that the fight needs to end. One way or another, the fight is not good for anybody, not good for the shareholders, not good for the companies, not good for the employees. And if my father was here today, I see no reason why. I don't think that he would disagree with me of not having my mother as the chairman.
But not agreeing on selling off the business, that is not something that you agree with.
No, I agree. Whatever it takes to end the fight, whether to sell the businesses, end of the day, value has to be created. End of the day, businesses cannot be suffered. End of the shareholders cannot be taken for a ride. And family fights should not have any place in the boardrooms. And if that is a solution to preserve value, so be it.
My one final question to you as far as this dispute is concerned, Mr. Modi. You talked about wanting to end this fight, wanting to settle this fight, you being in agreement with your brother regarding settling of this dispute, even if it means selling the business altogether. Let's talk about you. Are you willing to sell out of Godfrey Phillips, your company, a legacy company that's been within the family?
Well, I'm going to do whatever it takes to create value. I mean, not to destroy shareholder value, not to destroy the company, whatever it takes. I'm not skewed one way or another. I am very clear that the company is above all. I'm very clear that my mother cannot be appointed again. I'm very clear that I'm supporting my brother. And I'm very clear that the NRC is defunct. How do they assault a director? How do they make up stories and come out with videos that are not true?
Okay, and we'll keep getting you that interview as the day goes on. We need to take a short break, but up next we'll get you excerpts from our conversation with Titan and De Beers post their collaboration. Stay tuned.
Well, Tanish and DBS recently forged a strategic collaboration. Manisha Gupta caught up with both the managements and started by asking them about the importance of this tie-up. Let's listen in to an excerpt of that conversation.
This is key for us because we see India as an absolutely core market. We know that India has been shaping this industry from the B2B point of view, being the heart of the market in the polishing, but we see an opportunity for India shaping the market from a consumer point of view. Why? Because it's a very big market with a growing upper middle class, a very low penetration, which means very low. Few number of people are today buying diamond and very small diamond in the market. So great opportunity to show the way to the rest of the world about how to grow natural diamond. And this is why we see this partnership as key.
All right. Ajoy, just to put that in numbers then, and what is the kind of penetration would you see right now on Indians buying diamonds, and what is the kind of growth that we're looking at, just to put that in numbers?
I think the Indian diamond penetration is very low compared to the rest of the world. It's maybe around 10% people own diamonds. And from a value contribution, diamond jewelry is, for the market as a whole, at around 12%. For Tanishq, it's closer to 30%. We believe that, Tanishq has been a champion of democratizing diamonds in this country for the last 3 decades. And that's why we see that we have a lot more play in the diamond jewelry segment. We believe this partnership is a great opportunity as the market is about to take off. It has begun to take off, and there's a great opportunity to shape the market in the manner we want.
Ajoy, also the whole thing is about the next generation now, and we've seen jewelry as a big thing when it comes to Indian markets, but would you say that the buying trends are changing? It's more about brand consciousness, and the youngsters do want to know what's coming, where it's coming from, and how it's priced.
Yeah, I think brand consciousness is certainly on the rise. Digital discovery is huge. Customers are looking for sustainability and authenticity. I think in an increasingly artificial world that we live in, a virtual world and virtual lives that we lead, I think the need or the craving for the real and authentic is really on a surge. And this is not just jewelry, I'm talking across categories. So celebrating rarity, celebrating real, and celebrating true value and authenticity is in. So therefore, I think, this is a beautiful opportunity for us to celebrate something which is truly unique.
Sanil, I have had the chance of seeing how Tracer works, and while yes, we are talking about sustainability and responsible sourcing, how is De Beers evolving around all of this?
I think we are driven by the consumer and by our own sustainability goals. We know exactly where our diamonds are coming from Botswana, from Namibia, from South Africa, from Canada. And we have put Tracer out there to help the whole industry to answer the consumer need we just talked about, to be able to trace the diamonds and exactly know where they are coming from. And this is the way we see the evolution of the industry. Traceability is going to be key for the new generation and the next to come.
Sanil, when we look at India, and yes, it's a very important market going forward, how would you rank India, let's say in 5 years from now, with the kind of buying power that India has and the interest in luxury?
It's difficult to predict India because India is such an incredible market, but I will see a growth that is beyond any other market in the world because there is a cultural relevance of jewelry here, an appetite for it, and a growing middle class that wants to acquire. So the combination of both makes this market booming, and I think it's going to be the fastest growing market in the years to come.
Ajoy, would you say India as a market has come to be, because we understand hallmarking, we understand certification, we understand assaying, we do understand a lot of aspects of jewelry now as compared to earlier days. Where do we stand now, and how do you see this take a shape and form in the next 5 to 10 years?
You're right. I think the market has come a long way. The industry has come a long way. We see a lot of formalization that has played out. I think there's still opportunity for formalization and authenticity to play out in the diamond-studded part. Sure, there are more people buying diamond jewelry today, but are more and more people aware and completely transparent as to what they are buying, where are they buying from, and what is the value of that piece? That is still a little hazy. But I think what Sandrine said, as the market matures, we expect a lot more customers to be a lot more demanding. And, we are pioneering this, but we believe that 5, 6 or 10 years down the line, that will become table stakes.
Okay, interesting chat out there. Well, just a quick update on the markets. We appeared we were breaking away, but we've not able to sustain above the 25,150 mark. And the Nifty Bank, more importantly, that's moved to around 51,400, but it couldn't sustain over there. And yet again, it slipped from there. And I've been mentioning this, quite a few times in the last 10 days or so, that that's the resistance zone, 51,400, resistance zone, 50 DMA in that vicinity as well. But that's it from the team here at Halftime Report. You stay with us though. Business Lunch comes up next.